Imagine a fund so concentrated that almost its entire weight rests on a single asset type. Today, the crypto world is buzzing because Brazil's largest Bitcoin treasury firm, OranjeBTC, has just announced a massive pivot. They are preparing to launch the DIGY11 ETF, and the numbers are staggering. Instead of a broad basket of various cryptocurrencies, this fund plans to allocate a massive 95% of its portfolio into Strategy's Strc preferred shares. This is a high-conviction play that signals a massive shift in how institutional players in Brazil view digital asset exposure. We are seeing a move away from simple spot exposure toward highly specific, structured financial products. Why would a firm put nearly everything into one specific instrument? To understand this, we have to look at what DIGY11 is actually trying to achieve. The fund isn't just chasing Bitcoin price volatility, it is targeting a very specific yield. OranjeBTC aims to deliver returns that match Brazil's CDI, which is the interbank deposit rate, plus an additional 3 to 5%. By locking 95% of the fund into Strategy's Strc preferred shares, they are essentially using these shares as a high-octane engine to drive that target yield. The remaining 5% is earmarked for Strive SATA, providing a tiny bit of diversification, but let's be clear, this is a concentrated bet on the success of the Strc structure. This development is more than just a local news story, it is a signal of how Bitcoin is becoming integrated into the traditional financial fabric of Brazil. By using preferred shares like Strc, OranjeBTC is creating a bridge between the highly volatile crypto market and the structured needs of institutional investors who require predictable, yield-linked returns. This moves Bitcoin from being a speculative tour of value into a productive asset class that can compete with traditional banking rates. However, this level of concentration also brings significant risk. If the performance of Strategy's Strc shares falters, the DIGY11 ETF has very little cushion to protect its investors. Looking forward, the success of DIGY11 could trigger a wave of similar concentrated ETFs across Latin America. We are entering an era where Bitcoin exposure is becoming increasingly granular. We won't just see Bitcoin ETFs, we will see ETFs specifically designed to harvest yield from specific Bitcoin-related equity structures. As OranjeBTC moves toward the official launch, the market will be watching closely to see if this yield plus model can actually hold up against the volatility of the underlying assets. This is the laboratory where the future of institutional crypto finance is being tested right now. The bottom line is this: OranjeBTC is no longer just holding Bitcoin, they are engineering sophisticated financial products around it. The DIGY11 ETF represents a sophisticated, albeit risky, attempt to marry the growth potential of Bitcoin with the yield requirements of professional investors. Whether this 95% allocation to Strc becomes the new industry standard or serves as a cautionary tale of concentration, one thing is certain: the institutionalization of Bitcoin in Brazil is accelerating at an incredible pace.